The markets are currently closed, but Datavault Inc., trading under the ticker symbol DVLT on the Nasdaq, finished the last after-hours session at exactly $1.86. That price point, $1.86, is not just a number. It is a battleground. If you are looking at the chart and seeing a cheap tech stock that might pop, you are barely scratching the surface of one of the most complex, high-stakes financial wars happening in the small-cap space right now. The expectation for a stock trading under $2, especially one with AI in the name, is that it is likely a vaporware cash grab, a company capitalizing on the hype cycle to sell shares to retail investors on Robinhood before fading into obscurity. That is the cynical, and often correct, expectation. But the reality with Datavault is significantly stranger and far more aggressive. This isn't just a company trying to sell software. This is a company that has armed itself with $150 million in Bitcoin, filed a massive lawsuit against a prominent short seller, and is attempting to build the digital plumbing for the entire real-world asset tokenization economy. The reality is that DVLT is effectively transforming itself into a hedge fund attached to a patent portfolio, and understanding that pivot is the only way to make sense of this chart. Let's look at the immediate price action we have seen leading up to this weekend. The stock has been incredibly volatile, moving double-digit percentages in single sessions. When you see a stock like Tesla stock or Nvidia stock move 5%, it is headline news because of the trillions of dollars in market cap those moves represent. But when DVLT moves 15 or 20% in a day, as it has recently, it is driven by a completely different mechanic, the war between float expansion and short squeezes. We have seen heavy volume spikes recently, which often indicates institutional positioning or a coordinated retail wave. For those of you using Robinhood app or SoFi Invest to track this, you might have noticed the erratic bid-ask spreads. This is characteristic of a stock where liquidity is being fought over. The recent news that Silex closed a massive investment tranche in Datavault has acted as a floor for the price, preventing it from crashing through support levels, but the ceiling is being hammered by fears of dilution. There is a specific narrative tension here that we need to unpack. The short and distort allegations are central to the current price. Datavault has filed a lawsuit against Wolfpack Research, claiming that the short seller published false information to drive the price down. This is a classic Wall Street knife fight. Short sellers play a vital role in the ecosystem by exposing fraud. But when a company fights back this hard, not just with PR statements but with federal lawsuits, it changes the calculus for traders. It creates a binary outcome. Either the short thesis is correct and the stock goes to zero, or the company proves the shorts wrong and we see a violent squeeze that could send this thing vertical. This is why you see such high activity on Interactive Brokers trading platforms and Fidelity Investments accounts that specialize in high-risk equities. The smart money isn't betting on the earnings report next quarter. They are betting on the outcome of this legal and financial brawl. Now, let's push past the drama and look at what the company actually claims to do, because this is where the expectation versus reality gap is widest. Most people assume Datavault is just a cloud storage firm. That is boring, and frankly, it is wrong. Datavault is an intellectual property holding company that specializes in two very specific, very futuristic technologies: ADIO and Sumerian. ADIO is fascinating. It stands for Data Over Sound. Imagine you are watching a TV commercial or listening to the radio. The ADIO technology allows that broadcast to emit an inaudible tone, a sound wave you cannot hear, that your smartphone can pick up. That tone triggers an action on your phone, like opening a coupon, a website, or a token wallet. It bridges the gap between the physical world, sound waves, and the digital world, your phone. This isn't just cool tech, it is a patent minefield that Datavault controls. If this technology becomes the standard for how advertisers track engagement, every major media company would technically owe Datavault licensing fees. This is similar to how Apple stock benefits from the closed ecosystem of the App Store, but Datavault is trying to tax the open airwaves. Then you have Sumerian. This is their crypto anchor technology. It involves using microtransponders or molecular markers to tag physical objects, luxury handbags, pharmaceuticals, industrial parts, and link them to the blockchain. This is the RWA, or real-world asset narrative. The idea is that you can verify the authenticity of a physical item instantly by scanning it, and that verification lives on a decentralized ledger. In a world where supply chain fraud costs billions, this is a massive value proposition. This is why you might hear people comparing DVLT to other blockchain infrastructure plays. It's not about the coin, it's about the verification layer. However, we have to talk about the elephant in the room, or rather, the Bitcoin in the bank. Datavault recently raised capital not in cash, but in Bitcoin, roughly $150 million worth. This is an incredibly unorthodox move for a company of this size. It signals that management is betting on the appreciation of Bitcoin as much as they are betting on their own operations. It effectively turns DVLT into a Bitcoin proxy. If you own this stock, you are implicitly long on crypto. This appeals to the Robinhood crypto crowd, but it might scare off the traditionalists who use Fidelity mutual funds or Schwab Intelligent portfolios for steady, predictable growth. This capital injection is what is keeping the lights on and funding their aggressive expansion, but it adds a layer of correlation to the crypto markets that you must be aware of. If Bitcoin crashes, DVLT's balance sheet takes a direct hit. This brings us to the financial structure, which is the reality check that forces you to rethink the bull case. The company recently received stockholder approval to increase the number of authorized shares to 2 billion. That is a staggering number. Authorized shares aren't the same as outstanding shares, which are the ones actually trading, but it gives the board the power to print shares to pay for things. This is the dilution risk. If they start issuing those shares to pay for acquisitions or to keep operations running, your slice of the pie gets smaller. This is a common trap for new investors who use investing sites or self-investing apps without reading the SEC filings. You might buy the stock at $2 thinking it's a steal, only to find out there are twice as many shares in existence 6 months later, cutting the value of your holding in half, even if the market cap stays the same. Before we move on to the future outlook, I want to pause and get a sense of where you stand on this risk profile. Comment below how many shares of DVLT you currently hold, or if you are staying away entirely because of the dilution risk. I am genuinely curious if the retail sentiment here is diamond hands, or if people are just trading the volatility. Let's look at the sector momentum. We are currently seeing a rotation back into speculative tech and DePIN, decentralized physical infrastructure networks. Investors are looking for the next NVIDIA stock, but they are realizing that the hardware trade is crowded. The next leg up is likely the data trade. Who owns the data? Who verifies the data? Datavault sits right in that lane. The partnership with Silex isn't just about money. It's about validating the tech in the biotech sector. If they can prove that their Sumerian tech can track pharmaceuticals and prevent counterfeiting, that is a multi-billion-dollar use case. The healthcare sector is desperate for supply chain integrity. Furthermore, the company has issued guidance projecting revenue to exceed $200 million in 2026. That is an exponential jump from where they are now. For a company currently generating significantly less than that, this is a show-me story. If they hit that number, the stock at $1.86 is absurdly cheap. If they miss it, the market will be merciless. This is the tension I mentioned earlier. You are betting on execution in a company that has a history of pivots. There is also the fidelity factor, or rather, the institutional factor. Right now, institutional ownership in DVLT is relatively low. It is dominated by insiders and retail. For this stock to move to $5 or $10, big asset managers, the folks running Fidelity Wealth Management or Interactive Brokers Prime brokerage accounts, need to step in. They usually wait for cleaner balance sheets and consistent earnings. The Bitcoin raise might be a way to buy stability, but institutions prefer cash flows over crypto holdings. Watch the 13F filings closely over the next quarter. If you see a major fund take a position, that is your green light. Until then, you are swimming with the sharks and the day traders. And it is also worth noting the platform risk for you as a trader. If you are using a basic Robinhood cash management account, you might not get the best execution on a stock this volatile. The spreads can widen during the opening bell. More sophisticated traders often use Interactive Brokers platform tools to route their orders to specific exchanges